Hello, everyone. I'm Ken Moraif, the founder and CEO of Retirement Planners of America. And in this weekly Market Alert video, we're going to be talking about what's going to be a buzzword. You're going to hear a lot about it, stagflation, and what it can do, how bad it can get. And I want to talk with you about potentially what you should be thinking about with regard to how to deal with stagflation, and if the trade deals don't go well, and what a shock would happen if China stayed shut down indefinitely. So we want to talk about all those things, and I want to bring Jordan Roach here, our Chief Investment Officer, into the fray with me. Jordan, good to see you.
Good to see you, Ken, and happy belated 40th wedding anniversary. Is that right?
Yep. 40 years of marriage. I think it's phase happiest 25 years, I think, is our last 40 years of marriage.
I'll ask her that question and see, yeah.
I think she'll agree. She might say it's 10.
Yeah.
So, right now the buzz is, that we may be heading towards stagflation. So tell it, what is stagflation?
Well, stagflation is something we absolutely want to avoid. Right? It is a bad cancer. But effectively, it's a period where you have rising inflation, rising costs. And at the same time of that, you have unemployment coming up and growth going down. And why it's so rare and so hard to kill once it comes up is because typically those things don't come up at the same time. Typically, inflationary environments are created from healthy economic growth.
Yeah.
Typically, when you have poor economic growth and unemployment, that is deflationary. So when you have these two things rising together, it's very difficult for economists and policymakers to know what to do.
Yeah, so the Fed's in a really difficult place because if we have inflation, the natural tendency would be to raise interest rates to slow the economy down. But if we're in a period of stagflation, a stagnant economy and inflation, they raise interest rates, it'll cause the recession to become worse. So they don't want to do that. But if they lower interest rates, it causes inflation to become worse. So it's becoming like, which one do we deal with?
Which medicine are we going to deal with?
And it becomes very difficult.
Yeah.
So has stagflation happened anywhere around the world? Do we have any evidence of what's happened before?
We do. We absolutely do. So, you have several in South America. Even Venezuela recently. But a big one, I think, because they're economically, we're probably more akin to where we are, would be the UK in the 70s.
Okay.
So the UK in the 70s effectively start seeing commodity prices, oil and gas energy prices raise heavily. It went all the way through their economy. At the same time of that, they had already had economic growth starting to slow as unions and labor were just being less and less productive, and they had been spending a lot of money, so they had deficit spending. And all of these things led to stagflation. And they had double-digit unemployment, and then
they had a terrible recession. And then, if I recall, Margaret Thatcher had to give some pretty nasty medicine to fix it.
That's where she made her name. She came in there, obviously with the help of the financial treasury, helped raise interest rates. So she took that on, and then she privatized some state-run kind of business industries to spur growth and innovation, and at the same time started reducing government spending.
Right. So she had to create some pretty bad medicine.
Very bad medicine.
To get rid of inflation.
Oh, yeah.
And probably that's what policymakers would do here in the U.S. is choose, of the two, recession or inflation, which one's worse? Inflation is cancer, recession is the flu.
That's right.
Right. We have recessions all the time, but cancer is inflation because once it takes hold, it's so hard to get rid of. So they'll prioritize that and force a really bad recession. We have evidence of that in our country, don't we?
I think that's exactly what would happen. If you look back at like what they did in the UK, if you look certainly what happened with even Japan, South America, where they didn't tackle inflation first, and inflation but then persisted for a decade or more.
Yeah.
Right. So in the U.S., we had this in the early 70s. We had OPEC oil shock. Prices went high, and unemployment went to 12, 15%. And the government had to decide what are they going to deal with. And so that's when ultimately in the late 70s, early 80s, when Volcker came in, that's where they started tackling the problem.
They decided we've got to get rid of inflation, right?
That's right.
They Volcker and Reagan raised interest rates to 20%.
20.
And right now we're like, oh my gosh, interest rates at 5% are killers. Right. Imagine if that's what it takes to get rid of inflation that has taken hold in a stagflation environment. They had to do that, and it created a terrible recession and a really bad bear market there in the early 80s.
Oh, it did. And even leading up to that, 78 really bad, 80 very tough, 81, 82 very bad. The markets do not like, one, a stagflation or what it has to take to correct
The
stagflation.
medicine is so awful.
It's so bad. That's right.
So, what do you say to people that are watching, listening to this Market Alert video? You know, if they don't have a plan, what would you suggest? I know, become a client of ours. I get that one.
Yeah,
But what are we doing right now? We're half out right now, right? We're
Right.
defensive, but we're headed towards going back in. But right now we're in a defensive posture.
That's right.
Right.
Yeah. The first thing is say, okay, we're going to start with defensive in mind. We can always play offense when the time is right, but we are in a defensive posture, meaning we're going to own less stocks, risky assets than we did, 2 months ago. And then outside of that, it's thinking through, are there pockets of the market potentially, or types of assets that if we go through that environment could perform well? Mm-hmm. And so we're going to be thinking through, do we need to reposition some things to weather that storm?
Yeah, and in both of the instances that you described that are kind of related to our economy, the UK and the United States, both of those were essentially caused by a shock to the system.
Yes.
Right? And if we go into a full-fledged trade war with China, the supply chains could be cut off. We could have empty shelves in this country, and that could cause us to have a recession. And if we do have that, then what could also happen is if we have empty shelves, is whatever is on the shelf is going to go way up in price. So we could have stagflation. It's not an unreasonable thing to say.
No, it's not. I mean, you had, something like that, let's say in, Argentina or Venezuela, where you have, goods that just cannot come in here, right? If you got ships, hundreds of ships sitting at ports in China with our goods waiting.
Which is happening right now.
Then that means what happens is while we wait to sort that out, there's more dollars chasing less and less goods, which means prices go up. And this is the problem.
Yeah. So, ladies and gentlemen, what I always say is, let us do the worrying so that you don't have to. For our clients, we take care of them. We do these things. And we have a strategy we call invest and protect. And that strategy is a strategy that told us actually to sell 100% of all of our stocks in November of 2007, before the stock market crash that happened in 2008. And it also told us to sell literally the day before the pandemic was announced, which, we didn't know the pandemic was going to be announced, but something in the market did. So we avoided all that happened after they shut down the economy back then. So right now we're in a defensive posture. It's possible that we could be changing, but if you are over 50, if you're retired or retiring soon, our philosophy is that growth is important, but protection of principal is even more important. If you're getting ready to retire or you're already there, taking a big loss because the market goes way down could delay your plans. It could cause you to not live the lifestyle that you want. And for our clients, we think that would be tragic. So hope this video finds you healthy, wealthy, and wise. We think that right now is a time to still be defensive. We're not yet ready to go offensive, but we are hedging our bets right now, and we are planning ahead in case stagflation were to happen. But just to be fair, we give that a low probability. So thank you for watching. Please like and subscribe. Helps us out a lot. Share it with your friends. Even more, maybe go to our website. Check out our podcast. We had over 300,000 downloads over the last 12 months, so I think maybe you might find it interesting. Visit with one of our retirement planners. We have lots of stuff there for you. So thanks for watching, and we'll talk soon.
Retirement Planners of America, RPOA.com.